What's up, guys? Welcome back to another live stream. Joshua, Thomas, Ray, Brian. Can you guys hear me or see me? I'm supposedly online. There you go. Brian. What's up, guys? What a day. What a week, huh? We have a lot to talk about. I guess that you have a lot of questions and you guys want me to go over a bunch of stocks. Today we had, yet again, another red day in the markets across the board. There you go. Welcome back. And keep in mind that tomorrow we have options expiration. We have $2.7 trillion worth of options expiring tomorrow alone. So the roller coaster ride might keep going tomorrow. Keep that in mind. What a close. Yeah, it was a nasty close. And I love blood in the markets. Desmond, Deshaun. Yeah, I mean, we should love both scenarios, guys. When the markets go higher, arguably taking trades is easier. But when the markets go lower or go down, we have put options. We can short the markets. So this is this is a business in which we can make money on a constant basis regardless of the direction. We have the tools. We have the technical analysis, we have call options, we have puts, we can short stocks, we can buy shares. So we have a great variety of options available in order to make money in this business. Some people say, yeah, I am a bull, yeah, I am a bear. No, fuck that, guys. We just need to know our numbers. We just need to be disciplined when it comes to trading, and regardless of the direction of the markets, we can make money. That's it. That's just the way it works. So, nasty day across the board. Russell 2000 goes down 1.15%, please. By the way, drop a comment down below and let me know what stocks do you want me to go over. I am going to be over here calling balls and strikes today. I did it. I am doing it throughout every single trading session. So let's talk about the markets today thoroughly. So the Russell 2000 goes down 1.15%. NASDAQ goes down 1.17%. Dow Jones goes down 0.84%. And the S&P 500 went down 0.77%. In the case of the S&P 500, guys, you guys know the SPX. That's the cash index. The SPY tracks the SPX, the S&P 500. So today we had a very important battle that took place right at 4,400 points in the S&P 500, and the bulls ended up losing that fight. And we saw another 30-point drop into the closing bell. This was a very nasty price action into the closing bell, but tomorrow we have options expiration. And remember that when it comes to monthly options expiration, we have options or monthly options expiration every third Friday of the month, and that's a day in which basically weird stuff happens. So I think that we are due for a bounce. We're due for some sort of relief rally, but today's close was very nasty. And by the way, guys, today I noticed a lot of negative gamma throughout the trading session. So we have a ton of puts, or I can even make the case that we have more puts than calls that might be potentially expiring in the money tomorrow. So that could represent a temptation for the market makers in order to push the tape higher in the Qs, in the triple Q and the SPY, in order to have most of the put options that could be potentially expiring in the money tomorrow to expire out of the money. So I think that that's a positive aspect that the bulls are going to have, that the bulls might potentially have in their favor in tomorrow's trading session. When it comes to the sectors, take a look at these guys. bloodbath across the board. The only sector that closed the trading session in the green was energy. It goes up 1.20%, but other than energy, the other 10 sectors of the market went down. And the three most important sectors of the markets, the three sectors in which the seven magnificents trading, I am talking about consumer discretionary. This was the worst performing sector today, goes down 1.69%. Inside consumer discretionary, we have Amazon and Tesla trading. We had also communication services, which is a sector in which we have Google and Meta trading inside this sector. So XLC, or communication services, went down 1.15%, and technology, Microsoft and Apple, none other than those two stocks, technology went down to the 0.95%. So we are clearly seeing a corrective phase or stage in the markets. And now the question is, how deep or how low can the SPY go as of now? So we can make the case, and you guys know that I don't like the word oversold. I hate it, actually. I no longer use it. I used it for quite some time, but there is no way of determining when either a stock or an index is either oversold or overbought. So that is not a word that I am using. We can make the case that a stock or an index could be overextended to the upside or the downside, but we cannot tell for sure that something is oversold or overbought. However, in the case of the S&P 500 on the 4-hour chart, we can see the RSI sitting at 26 points. This is a low reading when it comes to the RSI. So we are looking for a bounce, and we are very likely to see a bounce anytime soon. I am not going to say that it is going to happen tomorrow with a 100% of certainty, but a bounce is going to happen, in my opinion, sooner rather than later. When it comes to the SPY, I have three important levels over here, guys. It would be very important for the bulls to open the trading session tomorrow above $436. Opening the trading session below $436 and failing at bursting above that level could open the door for $430. In my case, if we happen to see $430 in a, let's say, in a rapid way, in a very quick manner, I would be a buyer of the dip over here, because $430 is very close to this upward sloping 100-day moving average. And on top of that, this is a previous support back from late June. I think that this could be a buy the dip opportunity. In normal market conditions, we should see a very, let's say, noticeable bull bear fight over here. And I think that if we happen to see, as I just told you guys, a quick visit down to $430, $430.50 ish, I think that the bulls have a very high likelihood of getting the most of it, and we might see a bounce in the northern direction. Another potential scenario that we could be seeing tomorrow is a visit or a test of $439. $439 happens to be a previous resistance back from mid-June. So let's say, just for argument's sake, that the bulls open the trading session tomorrow above $436. If they happen to be able to close candles above $436, we have an immediate gap, or the next gap in the sequence, I could say, at $439. So $439 could be a sell the rip opportunity. However, if the bulls happen to be able to recapture $439, they have another gap to the upside up to the 5-day moving average, to this downward sloping 5-day moving average, which implies that this spot is going to be a very tough spot of resistance for the bulls at around $442.30. So these are the scenarios that I am going to be keeping an eye on tomorrow. Remember, opening the trading session above $436 and closing candles above that level might open the door for a test of $439. $439 could be a sell the rip opportunity. Remember that the trend is apparently starting to change, because in minor time frames we have a clear downtrend, but yet still in major time frames we can still notice a major uptrend. I wouldn't say a major uptrend. In major time frames, we are noticing an uptrend because we have an upward sloping 200-day moving average, and we can also see an upward sloping 100-day moving average. So in major time frames, the bulls or the buyers are still innocent until proven guilty, but oh boy, are the sellers or the bears making progress in minor time frames? Yes, they are. So a test of $439 could be another sell the rib opportunity. Most of the ribs or most of the let's say movement to the upside are being sold as of now. However, it would be a very good sign for the bulls recapturing $439. Yeah, and if that were the case, I think that we have another gap to the upside potentially up to $442.30 each. Opening the trading session below $436 could, and if we happen to see a massive bloodbath tomorrow, you never know, or in the upcoming, let's say, 1 or 2 trading sessions, because again, I think that we are about to see a bounce. $430, in my opinion, is a buy the dip opportunity. $430.50, 400, let's say $431 ish, but we are looking for a bounce. We are going to get a bounce, 1,000,000% guaranteed in the upcoming trading sessions. The $1 million question is, where are we going to be bouncing from? Stay tuned. Not a problem. Wow, a lot of people online. Yuli Chavez, Eva Boone, Chris Coverdale, and me, Thomas Spector, Jan Smidovan. Welcome back, guys. Awesome. So, what stocks do you guys want me to go over? What platform are you looking at for the sectors? Coifin. This is a very good platform, guys. By the way, you cannot see it here because I am blocking the name of the website. Let me show you guys. And I would encourage you to sign up for this platform, Coifin. Can you guys see it here? You don't need to pay anything. I am not paying anything for this service. And you guys can see the sectors. You guys can see global yields, recent IPOs, currencies. This is a very useful tool that I use on a daily basis in order to monitor the sectors of the market. The 11 sectors that trade inside the S&P 500. Baba and Tesi. Let's go ahead and take a look at Tesi, guys. Okay, let me see. TSLA. Alrighty. So what happened today with Tesla? It got killed, guys. Went down 2.83%, and it closed the trading session at $219.22. Guys, this is a very, very, but very important spot for Tesla. We are still seeing in major time frames an uptrend. But take a look at minor time frames. If I pull up here, let's say a 1 hour chart, take a look at this. So we have a reversion of a major downtrend. Of a major uptrend. I meant to say. However, take a look at this blue line, guys. This is a 100-day moving average. Such an important place for Tesi. Extremely important. And on top of that, this 100-day moving average is upward sloping. So I'm thinking that Tesla has a fair shot at holding this 100-day moving average and bouncing back up, in which case I have 2 potential gaps to the upside. The first one, the 5-day moving average, which happens to be downward sloping. That implies that that 5-day moving average is going to represent a very big resistance for Tesla. You're looking at $230-ish. And if the bulls can burst above this downward sloping 5-day moving average, as I just said, at around $230, we have another gap to the upside up to $236. This is a previous support back from June 26th, back from late June. For someone that likes the relative strength index, the RSI, they would tell you that Tesla is oversold. Take a look at the RSI sitting at 21 points on the 4-hour chart. Let me pull up here a 1-year chart, 28 points. So this is another stock that is due for some sort of bounce. But mind you, guys, this is a very important spot. Take a look at this. So we have the convergence of the 100-day moving average, which happens to be upward sloping. That implies that it should provide a good support for the bulls of Tesla. But at the same time, this area at around 219 bucks, 220 bucks happens to coincide with a previous resistance back from mid-February. And if I pull up here, let me pull up here, guys, an anchored volume weighted average price. Take a look at this. Such an important spot for TESI. Let me see. If I remember correctly, guys, I think that we have the anchored volume weighted average price. Let me see. Yeah, it is close to this place. Let me see. Yeah, we have an anchored value weighted average price that comes from the all-time high of Tesla at around what was that all-time high? What was the price of that all-time high? 420 bucks. That is pretty much close to today's closing price. Take a look, 222 bucks. This is a very important spot, guys. As I just said, this AVWAP or anchored volume weighted average price that comes from the all-time high of TESI. So if the bulls can hold the 100-day moving average as support, as I just said, 200, we said over here, 217 bucks. And if they happen to be able to recapture $222-ish, again, this AVWAP that comes from Tesla's all-time high, that would be very, but very encouraging for the bulls. And yes, why not? We can make the case that the RSI reading is a bit low, so we are about to see a bounce in the northern direction in the case of Tesla. However, losing this support of this upward sloping 100-day moving average could open the door for a test of the 200-day moving average near $200. But Tesla is pretty much about to bounce back up, guys. And in my opinion, it is going to bounce from this 100-day moving average near 217 bucks, or worst case scenario, we could be potentially about to see TESI bouncing back up from this 200-day moving average near $200 per share. By the way, let me take a look at the market structure of Tesla, guys. Let me take a look at the supply and the demand of Tesla over here. What is it looking like? Let me see. Yeah, the market structure doesn't look encouraging at all. Take a look at the demand, guys. On top of this chart, you guys can see the demand or buyers, this blue shaded region on top of this chart. And at the bottom, you guys can see the supply or sellers. And take a look at how the demand is gone. There are no buyers for Tesla at all. And the supply is also decreasing, but it is way above the demand. However, it is kind of encouraging seeing the supply decreasing as well. I think that Tesla is about to bounce back up. As I said, in the case of the SPY, sooner rather than later. And I'm talking about normal market conditions, guys. We have some mechanical aspects in the markets that are causing trouble as of now. This is one of the mechanical reasons. Take a look at the 10-year Treasury yield, guys, TNX. The 10-year Treasury yield, guys, for the most part, is inversely correlated to tech stocks. Okay, this is some sort of reference for the Federal Reserve in order to hike rates. So whenever we see the 10-year Treasury yield running up in a very aggressive way, this usually puts downwards pressure over most of the tech stocks and higher multiple stocks and stuff like that. I'm talking about Tesla and Nvidia and so forth. So as of now, we have the 10-year Treasury yield about to burst above 43.3. If we talk about this is an ETF that tracks the 10-year Treasury yield. The ticker symbol is TNX. If we talk about the 10-year Treasury yield itself, I'm talking about 4.30%. But take a look at this, guys. Last time TNX hit 4.30%, what date are we talking about? October 17. What happened on October 17? We saw the bottom of last year, right at 4.30% in the case of the 10-year Treasury yield or TNX. So when I'm talking about normal market conditions, I'm talking about, for instance, TNX. If TNX, or if you guys happen to see TNX tomorrow bursting above 4.30% and keep going higher, that's a whole different story, guys. That would most likely affect the technical analysis that I am telling you guys about as of now. Okay, let me see. All stocks have been getting murdered. Yes, sir. What are your expectations in this sector with stocks like Palantir and AI? They depend on NVIDIA, bro. And NVIDIA is posting earnings next week. And if NVIDIA drops the ball, most of the AI-related stocks are going to get killed, most likely. I'm talking about C3AI. I'm talking about Palantir. What other stocks, guys? AMD. So the earnings report of NVIDIA next week is going to be prime time, definitely. If you guys are thinking about trading Palantir or AI, or if you guys have any losing position on stocks such as I just said, Palantir and AI and stuff like that, wait until the earnings report of NVIDIA comes out, because that is going to be a very big market mover in general terms, needless to say, when it comes to AI-related stocks. Sure. Advanced micro devices. Let's move on. There you go. So there you have the analysis of AMD. Let me have a sip of Sprite here, guys. Take a look at AMD. So, in the case of AMD, if we compare AMD relative to Tesla, guys, Tesla is still trading above its 100-day moving average. And that 100-day moving average, which happens to be this blue line that you guys can see over here, is upward sloping, which is a good sign. In the case of AMD, we started to see a reversion of a major uptrend in minor time frames. This is a 1 hour chart. Take a look. We have a downward sloping 5-day moving average, and I'm thinking that the 20-day moving average gotta be downward sloping as well. Yes, it is. Okay. However, the bulls couldn't hold today as support this upward sloping 100-day moving average. So now we are starting to see what was an uptrend in both minor and major time frames being reversed as of now. Very, but very bad sign for AMD. Let me zoom in here. So what would be a positive scenario for the bulls tomorrow? They need to recapture by any means necessary, guys, this upward sloping 100-day moving average at around $107. This is extremely important. On top of that, $107 happens to coincide with a previous support back from late June. So this would be a, let's say, quote-unquote bullish scenario for AMD tomorrow. Opening the trading session above $107 could signal that the bulls could be gathering momentum in order to fill two potential gaps to the upside. The first one up to $109. $109 happens to be a previous support back from late July, and also a previous support back from this is June. Let me see over here. I'm a bit tired, guys. So this is a previous support back from late July and also back from early July as well. Very important support over here for AMD at around $109. Above $109, we have another gap up to $114, but let's not get ahead of ourselves. So this is the most important scenario for AMD tomorrow, being able to hold this 100-day moving average as support near $106-ish. And if that were the case, there is a potential gap up to $109.50. If the bulls happen to fail at recapturing this 100-day moving average, the next important spot or the next area of interest for AMD could be $102. $102 is a previous resistance back from late March. That, by the way, is very close to this blue line, this dark blue line that you guys can see over here, which happens to be the 100-week moving average. So we could expect the bulls to be able to put on a good fight near $102. So this chart isn't looking, it isn't looking good at all, guys. Let's see if the bulls can recapture this 100-day moving average. Let me take a look at the market structure of advanced micro devices. Let me see. So what do we have over here when it comes to AMD? And take a look, guys. Remember, on top of this chart, you can see the demand, and at the bottom, you can see the supply. Take a look at the supply, guys. It is skyrocketing through the roof, whereas the demand is decreasing. So we have a market structure confirmation, or a confirmation from a market structure standpoint, that sellers are regaining total control of this stock, and we might see AMD potentially paying a visit down to this area, $102. AMD closed the trading session today at $104.44. I wouldn't touch this stock, guys. So I wouldn't be trying to play the bounce from $102. I would expect buyers to show some strength by recapturing this upward sloping 100-day moving average. So in my opinion, AMD is a no touch below $106, $107-ish. Alrighty, I have some more requests. Let me see. Preston Harris, Microsoft. I have some requests about Microsoft, MSFT. What is going on over here? Take a look, guys. Oh my God, this is another stock. Take a look, guys. So the bulls lost today the 100-day moving average as support. Not a good sign. Microsoft went down today 1.10%, and it closed the trading session at $316.88. Again, guys, the very same case of AMD. We had a clear uptrend in both major and minor time frames. We started to see a reversion of a major uptrend in minor time frames, and now what was a potential reversion of a major uptrend in minor time frames turned out to be a total reversion of a major uptrend, because we have over here a downward sloping 5-day moving average, which happens to be, in my case, and I have been telling you guys this, I use the 5-day moving average in order to determine who is in charge of a technical short in minor time frames. So by taking a look at a downward sloping 5-day moving average, we can confirm that sellers are in control of any given technical short in minor time frames. But now take a look. Sellers took control and broke to the downside an upward sloping 100-day moving average. So Microsoft is pretty much reversing an uptrend, guys. It isn't looking good at all over here. So pretty much the same case that I told you in the case of AMD. Again, I wouldn't touch this stock below this 100-day moving average. I would wait for buyers to show some strength by recapturing $319. And if that were the case, and by the way, guys, whenever we see a bounce or a relief rally or a decent dead cat bounce in the SPY and the Qs, Microsoft is going to be leading the charge, 100% guaranteed. So I would wait for Microsoft to recapture $319, and if that were the case, we have room up to $328, which is a level that happens to coincide with the downward sloping 20-day moving average. And this is also a previous support back from late July, and also back from early July, and also, by the way, back from late June. So be careful with Microsoft. And remember, guys, when it comes to buying the dip, don't buy the dip. Buy strength after the dip. So there is no strength over here when it comes to buyers. I want buyers to show me some strength. By doing what? By recapturing this upward sloping 100-day moving average. So a no-touch Microsoft, in my humble opinion, below $319. Microsoft is in ex-dividend playbook, will be down 1-3 days, but they don't pay much. Yeah, they pay 49 cents, bro. No worries, it isn't much. Now, this shouldn't affect Microsoft much, and they paid the dividend a day ago. Now, Microsoft is going down, guys, because these stocks went too far too fast, and the markets were pricing in a perfect scenario, and the earnings reports that have been coming out, haven't been perfect. So the markets are now cutting their hair, or cutting the hair, or delivering or providing a nice haircut to most of these 7 magnificent stocks, because their valuations got out of whack. That's basically what it is going on as of now. This is my first time on your broadcast. Very informative. Thank you. Do you have a like stock list highlighting your findings? This is golden. Thanks. Um, for the most part, guys, when it comes to our community, Chris Saints community, you guys know that on my Discord channel, I am pretty much narrating the whole trading session. Early in the morning, I told you guys a pivot when it comes to the SPY, and I told you, hey, keep an eye on this pivot. Above the pivot, the bulls are going to be in control. Below the pivot, the bears are going to be in control. And I am posting stuff like every 30 minutes, every 2 hours, worst case scenario, and I'm letting you guys know the what, in my opinion, are the most important areas of interest that we need to keep an eye on. What's your channel? You guys can subscribe to my channel, the Bilingual Stock Market channel. I post videos in both English and Spanish. So, yeah, go ahead, hit the subscribe button. He keeps me green. There you go, Yasha. Yeah, we are doing a very good job. Yeah, in the community, narrating the training session. Just joined Chris, same group. I am watching your channel like a hawk. Awesome, awesome. Okay, what other stock do we? No. Let me finish with Microsoft. In my opinion, a no touch below this upward sloping 100-day moving average. And now let's go ahead and take a look, guys, at the market structure of Microsoft. So what is going on over here with Mr. Softy? Let me see, Mr. Softy. Take a look, guys. So the supply or sellers, the supply is going higher, but the demand is starting to rise after having dropped like a rock. This is a good sign for Microsoft. So I'm thinking that despite the fact that the supply is a bit above the demand, or is higher relative to the demand, if we happen to see, as I said again, and it is happening, we are about to see a bounce sooner rather than later, in my opinion. I do see Microsoft recapturing this upward sloping 100-day moving average eventually, and that might be a trading opportunity in the case of Mr. Softy. HE, Hawaiian Electric, guys, just stay away from this. Just stay away from this. Take a look at this. There's no reason to trade this. This company seems to be in trouble because of the fires that took place in Hawaii. So I don't trade downtrends. I only trade uptrends. And whenever you guys see a downtrend, and take a look. Why do I say that this is a downtrend? We can see a downward sloping 5-day moving average, and this stock is clearly trading below its 200 and 100-day moving average. This is a major downtrend. This chart is absolutely broken from a technical standpoint, so this is trash. This is garbage. Just stay away from this. If you think that at some point in time buying the dip in Hawaiian Electric is going to represent an opportunity, let other people do the heavy lifting. Let others buy the dip, and once an important moving average happens to be recaptured, then you go ahead and buy the dip. So there's no need to guess the bottom over here. This is garbage. Just stay away from this. Let me see, not for a long-term hold if it stops falling. No, but you don't need to guess the bottom here. Don't try to be the hero here, guys. Don't try to guess bottoms. Again, you can buy the dip, but buy strength after the dip occurred, after the dip happened. A dip is not a dip until a stock bounces from a certain area of support. So why do you need to guess the support? Why do you need to guess the exact level from which a stock is going to bounce back up? It doesn't make any sense, guys. Wait for an area of potential support to act as such, wait for the stock to bounce back up, and then you buy a strength after the dip. But do not buy the dip like, okay, this is a previous support, this stock is going to bounce back up from here. No, don't do it. Buy strength after the dip. Don't buy the dip. Okay, let me keep going here, guys. I don't understand the moving average. I feel like Chris using EMA and you. Okay, yeah, you need to understand the difference that we have between exponential moving averages, or an exponential moving average, a simple moving average, and a daily SMA. The moving averages that you guys can see over here. Let me look for the SPY. So there's a difference, guys. Okay, the daily SMA or the daily moving average shows the same levels regardless of the chart. The same level, the same price. Whereas an exponential moving average and a simple moving average, the levels that they show change depending on the chart. A 4-hour chart, a 5-minute chart, an hour chart, and so forth. So that's the difference. In my opinion, in my case, and you guys have to use whatever works the best for you. In my case, I don't use neither exponential moving averages nor simple moving averages. Why? Because the price changes depending on the chart. As I said, in the case of the 100-day moving average and the 200-day moving average, these two moving averages, or any daily SMA, or any daily moving average, shows the same level regardless of the chart. Take a look at this. This is a 4-hour chart. Take a look at the 100-day moving average here, guys, on the SPY. $427.74. If I pull up another chart, let me pull up here a 1-hour chart. Take a look. The same level. You see? Let me show you again. Take a look at the 100-day moving average, guys, over here. This is a daily SMA, daily moving average. $428 on a 4-hour chart. And if I pull up a 1-hour chart, what level do I get? $428. It reflects the same level, the same information regardless of the chart. Whereas in the case of a simple moving average and an exponential moving average, the level depends, or the price that is reflected by the moving average changes depending on the chart. And do you guys happen to know the difference between a simple moving average and an exponential moving average? In the case of a simple moving average, what occurs is that a simple moving average, basically, or an SMA, let's say that averages the closing prices of a specific number of candles. Okay, so it averages the closing prices of a specific number of candles depending of the chart. For instance, in the case of a 1-hour chart, what does this mean, guys? That every candle on this chart closes every 1 hour. You see? So in the case of an exponential moving average, instead of averaging the closing price of any given number of candles, depending on the chart, an exponential moving average, let's say, that has a larger emphasis, or puts a larger emphasis on the closing prices of the 10 last candles. So an exponential moving average is more reactive relative to a simple moving average. You see? And I know that a lot of you guys use the, yes, it's going to be available on my YouTube channel, absolutely. Okay, so that's the difference, guys. The exponential moving average is more reactive to the most recent price action. Okay? In the case of the simple moving average, it simply averages the closing prices of any given number of candles depending on a chart. And in the case of a daily moving average, which are the moving averages that I use, they reflect the same levels regardless of the chart, because they simply average the closing prices of a, let me try to explain this the best way possible. A daily SMA, or a daily moving average, averages the closing prices of any given number of trading sessions. So in the case of this moving average, guys, the 100-day moving average, this is basically the average price of the last 100 trading sessions of the SPY. You see? And in the case of the 200-day moving average, the average closing price of the last 200 trading sessions of the SPY. And I'm going to get the same level regardless of the chart. There you go. Yes, you can watch after. Yeah, it's going to be available, sure. Okay, let me see. What do I have here? Another request. Let me see. Yeah, we have a bunch of those. I have a Netflix. Let me take a look at Netflix, guys. This is an interesting one to take a look at. Let me see. Netflix. There you go. What is going on over here? Take a look, guys. We have an uptrend. Okay, and I'm going to say a major uptrend because we have a downward sloping 5-day moving average. But we have an uptrend. Why? Because we have an upward sloping 200-day moving average and also an upward sloping 100-day moving average. Fair enough. However, the sellers are starting to gain control of the stock of this company. Why? Because we have a downward sloping 5-day moving average. So what could be happening over here in the case of Netflix? What could be the next foreseeable support? I would say the upward sloping 100-day moving average, which is sitting at $387. 387 bucks, guys. Oh my God. Let me see if I can speak, guys. I have been talking all day long, guys. You know that I live stream for the people of my Patreon throughout the whole training session. It is spoken in Spanish, so you guys cannot sign up. You will not understand a word. So let me have a sip of Sprite here. Okay, in the case of Netflix, what is going on over here? Take a look. This 100-day moving average at around 387 bucks-ish happens to coincide with a previous support back from late May, actually back from May 31st. So this is a spot in which I think that buyers could be potentially showing up. So it could be a buy the dip opportunity after the fact. A support is support after the fact. I'm not going to be trying to guess support at 387 bucks. What would I do, guys? I would wait for Netflix to pay a visit down 387 bucks, and if it happens to bounce back up on good volume, I would be buying the dip after I can see a strength. Another potential scenario would be recapturing, and this is a very volatile stock, guys, that moves in a range of 15 or 20 bucks per trading session. Another potential scenario here would be Netflix recapturing this semi-descending 5-day moving average at 416 bucks, and that would be the scenario in which I would be more interested in. Okay, because in this case, the buyers would be showing me strength. So Netflix recapture 416 bucks. There's another gap up to 427 bucks, which happens to be a previous resistance back from early June. So this would be ideally the trade that I would be involved in the case of Netflix, recapturing 400. Let me see it again. 418 bucks approximately. So bursting above this 5-day moving average. And another area of interest, support-wise, after the fact, would be 386 bucks. Let me take a look at the supply and the demand of Netflix over here. Okay, let me see. 5:30 p.m. Eastern Standard Time. So the demand is starting to flatten out, which is somehow positive. However, take a look at the supply. It is rising and above average. So sellers are still in control here. So watch out for Netflix maybe paying a visit down to 388 bucks approximately. Okay, thank you for that information. Not a problem. I am here to help. Absolutely. Can you repeat the platform you're working on? This is TD Ameritrade, Thinkorswim. This is my, let's say, main platform. And the other platform that I told you guys about is Coifin. I don't know if you guys really pay much attention to the sectors of the markets or the mechanical factors of the markets, because I can tell that you guys are so into technical analysis, but this is information that you should know about if you want to understand better this business. The 11 sectors that trade inside the SPY or the S&P 500. Yep. What do you think about Casco plus Mark Cuban's company and Amazon tie-in? I don't know that news. What happened there? I think that Casco is a good-looking chart, right? Isn't it? Let me see. Take a look. An ugly reversal here, guys. What happened? So Casco went down today 2.14% and it closed the trading session at $547.11. Can the bulls find support over here at around $446? This is a previous high, guys. A previous 52-week high back from early July. This would be an interesting spot if we can confirm that $447-ish is providing support. If that were the case, we have a gap up to this 5-day moving average up to $557. If we could trade this ticker, guys, the way that I am telling you, from $547 up to this 5-day moving average, you're looking at a 2% profit trade. So this is an uptrend. No doubt about it. Upward sloping 200-day moving average, upward sloping 100-day moving average. We can make the case that the fact that the bulls lost the support of the 5-day moving average is not a very encouraging sign. But let's see if $447 happens to hold that support. If it doesn't, maybe another potential support could be coming in at $531 approximately. $530 is a previous resistance back from June 16, back from mid-June. Let me take a look at the market structure of Casco. Let me see over here, Casco wholesale. Let me see, and there you go. This is a very, very positive market structure. Remember, guys, on top of this chart, we have the demand, buyers. And at the bottom of this chart, we have the supply. Take a look at the blue shaded region. It is solid, stable. So buyers are still there. However, on the flip side, sellers are nowhere to be found. We have a decrease in supply that is below the average. This is a very encouraging market structure for Casco. So I'm thinking that $547 could be acting as support, or maybe this previous 52-week high near $531-ish as well. I don't know about the news. Let me see if I have the news here. The body's high for Walmart earnings. Walmart Casco Wholesale announces election. Director of Atlanta. I don't know the news that you're telling me about, bro. Mark Cuban's company and Amazon tie-in. I'm gonna try to do some research about that news. Yeah. Today was the first time I pulled up the heat map during intraday. Oh, yeah. What is the heat map over here? I think that is here, right? What is the heat map? Scan here, right? Or Market Watch. There you go. There you go. That's a heat map. Take a look. It was a nasty day, guys. Some green, mostly energy. ExxonMobil, Chevron, ConocoPhillips. As I just told you guys, the only sector that was able to pull off a green day was energy. That was it. Other than that, it was a nasty day across the board, for sure. Yep. Let me see. What other requests do I have over here? Hi, everyone, Coach. I have put on SoFi set to expire tomorrow. Will you examine SoFi and share your opinion? Sure, absolutely. SoFi Technologies. Let me see. Perhaps give me patience. I'm waiting the right entry. Can you go over Axia? Let's do Axia as well, yeah. We are, how long? 48 minutes in. How about that? Axia, guys. Nasty reversal. By the way, guys, I think that I told you. Take a look, guys. I called out a non-academic head and shoulders formation not a while ago. I think that I shared this chart with you guys, and it is playing out, guys. Take a look. We have a downward sloping 5-day moving average. The bulls lost a few days ago also the 20-day moving average, which was acting as support. And now we have a similar situation relative to most of the stocks that we have gone over today. Why? Because we still have an uptrend. Why? Upward sloping 100-day moving average and also upward sloping 200-day moving average. So we have an uptrend in major time frames. But if I pull up a minor time frames, a 1 hour chart, take a look at these guys. Sellers are definitely gaining control of SoFi. So very good job with those puts of SoFi. It broke an important support today. I don't need to zoom in here. So it broke an important support today at $8.22. $8.22 is a former high back and a former resistance. Therefore, back from early February. So we have a next gap down to a former area of support at $7.80. That could be your price target in order to close those puts, because those puts are expiring tomorrow. So $7.80-ish is a previous support back from mid-June. So to the downside, this could be the next gap, but to the upside, because this is an important area, guys, $8.20. What happens if SoFi can open the trading session tomorrow above $8.20, and if we happen to see finally a relief rally or whatever, or at least a decent dead cat bounce in the major indices? So we have a gap up to $8.90, which is a previous resistance back from mid-June. So if we were able to take this long trade on SoFi from $8.25-ish up to $8.95, this could be a 10% profit trade. So this could be an interesting trade. And by doing so, by the way, by filling this gap to the upside, up to $8.70, the bulls of SoFi would have to burst above this downward sloping 5-day moving average, and if they happen to be able to do so, that would be some sort of an encouraging sign from a technical standpoint. Let me take a look at the market structure of SoFi Technologies. Let me see SoFi Technologies. So what is demand and supply looking like? Oh, wow, guys, this is a nasty market structure. Oh my God, take a look at the demand on top of this chart, guys. Collapsing. It collapsed. Buyers are nowhere to be found. They are gone. Kaputs. However, at the bottom of this chart, we can see the demand rising and way above the average. Very ugly market structure for SoFi. So I'm thinking that unless we happen to see a massive bounce in the markets, because because we are quote unquote oversold and stuff like that, SoFi has an appointment at $7.80 approximately, sooner rather than later. There you go. Okay, guys. Evergrande filed bankruptcy. I didn't know that. Evergrande. Okay. Look at VOD. Do you play VXX? I have some calls of the VIX, but no, I don't play with VXX. Guys, you have to be very careful with the VIX. Take a look. Let me tell you something. Some people, I have seen this over and over and over again. This is a chart of the VIX. Okay, so I have seen I have seen this on multiple occasions. So, for instance, $12.90. Take a look at this. This is a quote-unquote support for the VIX. There are no buyers or sellers in the case of the VIX. There are no buyers and sellers. So there is no support, there is no resistance when it comes to the VIX. Don't call out areas of neither support or resistance in the case of the VIX, because we don't have buyers here. The VIX or the volatility index is simply a mirror of the options market of the S&P 500. That's it. But we don't have buyers or sellers over here. So when it comes to the VIX, and I guess that this is something that you didn't know, I use it as a hedge, but I didn't analyze the VIX from a technical standpoint. So I'm not going to be buying either calls or puts of VXX or UVXY, pretending that, but take a look. So the VIX is approaching $18.40 or $18.40 points, and this is a previous resistance. Bullshit. That's simply bullshit, guys. We don't have buyers or sellers in the case of the VIX. So if you perceive that the S&P 500 or the QQQ or the Nasdaq 100 are going lower because the technicals of the QQQ and the SPY say so, you can go ahead and buy maybe some calls of VXX, but avoid, let's say, breaking down from a technical standpoint the VIX, because we don't have neither buyers or sellers in the case of the VIX. Is what I've been waiting for. There you go. Absolutely, not a problem. I was asked about accidental petroleum. Oxy. Okay, let me ask you. Let me ask a question here, guys. What's the most important indicator that you need to track if you are trading Oxy? Don't tell me Warren Buffett, please. Come on, guys. Give me an answer. What's the most important indicator that you need to track before trading Oxy? While I take a sip of Sprite. No one knows? XOLE, there you go. Yeah, no, don't delete it. That's the correct answer. You need to track, guys, the Dixie, the US dollar, and oil. Correct. So remember, guys, the Dixie or the US dollar is inversely correlated to oil. So please, if you want to buy either puts or calls of Oxy, you need to make sure that oil isn't going in the opposite direction of the trade that you're about to place. This is extremely important. So, I'm gonna say Charlie Munger. I mean, kind of. But I don't know if Munger is actually an Oxy, right? I know that Buffett loves the company, right? USO could be. I mean, you can track either XOLE or oil. In the case of oil, you can use the ticker /CL. This is the West Texas Intermediate. So this is the oil for the US. Okay. In the case of Oxy, it is making a test of this 5-day moving average near $64. Oxy went up today 0.98%, and it closed the trading session at $63.16. So if the bulls can burst above $64, we have a clear gap up to $66.50 each, which is a resistance at which the bulls failed at on August 11, a few days ago, and this is also a previous resistance back from late March. So this could be a legit breakout trade with Oxy bursting above this 5-day moving average. So if we happen to be able to take this trade, guys, after we confirmed that Oxy was able to burst above $64.20, so after we can confirm that Oxy burst above the 5-day moving average, say that we buy some shares at $64.40 each up to $66.35. This is a 3% profit trade, nothing to sneeze at. Obviously, we need to track the price of oil, and if oil keeps going higher, and by the way, guys, let me show you. Oil has a gap that could be potentially being filled anytime soon up to $85. Take a look, guys. And this is a 4-hour chart. There you go. Take a look. If oil fills this gap up to $85, we would arguably need the US dollar, the Dixie, to go a bit lower. But if oil or CL can fill this gap up to $85, I think that Oxy can fill this gap that I just told you about up to $66, no problem. From $64.20 up to $66, this could be a 3% profit trade. RSI sitting at 44 points, very good for Oxy. So this is the scenario that I am thinking about Oxy. There you go. Not a problem, guys. I think that I am going to wrap it up. Very nice chat today. Yeah, I am 58 minutes in. As I said, I was live streaming throughout the whole training session, so I am very tired. By the way, guys, I am not going to be active on Discord tomorrow. I have a medical appointment, and I am not going to be able, unfortunately, to be with you tomorrow. But I am going to be back on Monday in uniform, ready to call balls and strikes once again. By the way, I'm going to ask you a favor. Remember, once I'm done streaming for you, I am going to release this video on my YouTube channel. So please go ahead and drop a comment, because the comments that you drop on the live chat doesn't transcend into the, let's say, regular YouTube video. So if you don't mind doing that, go to my YouTube channel, drop a comment, hey, Alvaro, thanks for the stream and stuff like that. That is going to be very much appreciated. So thank you, guys. Enjoy the rest of your day and keep it up, okay? Thanks for joining me today once again. Bye, guys. Take care.